evening. This is ET Now. You're with the India Development Debate, and tonight it's a special edition. We've got two blockbuster debates lined up for you on the India Development Debate.
Indeed. Now, the economy is clearly on the mend. India's GDP growth soared to 7.2% in the third quarter, topping the growth rates in the previous two quarters, thanks to a strong performance by the manufacturing sector and farm output. Buoyed by the pickup in the economic activity, the government has now raised the GDP growth forecast for fiscal year 18, which is the present fiscal, by a notch to 6.6% from the previous 6.5%. The third quarter growth is much higher than the ET Now's forecast of 6.9%, thanks also to the pickup in construction activity and coal output. Besides, of course, a very good growth in agriculture at 4.1% and manufacturing at 8.1% also.
Indeed, what will come as a big breather for the government is a strong revival in the farm sector. Agriculture output grew 4.1% in the third quarter, a big jump from the 2.7% growth in the September quarter. Commenting on the latest GDP data, economists said the spike in manufacturing output, which grew at 8.1%, and the higher than expected farm sector growth are clear indications of a turnaround in the economy. So is the worst over for India, which has regained the #1 slot on the growth charts? That's our topic of discussion tonight on the India Development Debate. Joining us on the show this evening, Shobhana Kamineni, President CII, Dr. Pranab Sen, former member of the Planning Commission and also former Chief Statistician of India, Maithili Bushnurmat, Consulting Editor of ET Now, and R. Jagannathan, Editorial Director at Swaraj Magazine. Dr. Sen, I'm going to start off with you. Is it fair to say that the economy has finally recovered from the twin blows of demonetization and GST?
No, I think it's still recovering. Hopefully we don't stop at 7.1. And I think there are a few weaknesses that we will have to note, and I'm sure we'll get into it as the debate progresses. But let me give you one word of caution. I mean, if you really look at the GVA growth, that is pretty much according to expectations, which is around 6.6, 6.7. is GDP, which has come in at 7.1, and I suspect a lot of that has to do with the GST glitches in which the refunds were not being made at that time. So that's going to self-correct. But having said that, I think at least on construction and on investments, things look a lot better. But farm sector, I'm afraid we still need to worry, because although the real farm output has grown by 4.1%, the nominal has actually grown less than that, which means in effect that the farmers are not getting the benefit of a very strong output growth.
Okay, fair point indeed, and Dr. Pranab Sen insists there that this is still a recovering economy. We've still not recovered from the blows of demonetization and the GST. But Shobhana Kamineni, what's your view on that? Do you believe the worst is behind the Indian economy? Do you believe the twin blows of demonetization and GST are perhaps behind us?
I can certainly say that we've recovered from demonetization for sure. And I think GST, it's actually, we predicted that the economy will move up by 1.5%. So this is a work in progress, and it's nice to see that collections are improving, and actually we can see it from strong consumer sales. That has moved up, and that's the early indicator. Auto continues to do well. So I would say that with a resounding yes, that the economy is moving up.
Maithili, how are you reading these numbers? I mean, 7.2% is definitely way better than what the market was expecting. Consensus view was about 6.9%. Is it fair to expect that incrementally it will only get better from here on? And now does the 7.5 to 8% growth for the next financial year look a little more probable?
Well, 8% of course is pitching it too high, Sandeep, and it's always dangerous to draw very firm conclusions from just one quarter's data. But having said that, the fact is that particularly two sectors, agriculture and manufacturing, the numbers look very robust despite the relatively high base from the previous year. So even though it's dangerous, as I said, to draw any conclusion from just one quarter's numbers, overall the fact that the number has come in higher than estimates, and also the two very critical sectors for the well-being of the economy have performed far better than before is certainly good news for the economy. So hopefully if things continue like this, which of course is a big if, but there's reason to hope because GST has kind of stabilized. The bad effects of demonetization have worn off. So certainly I would be far more hopeful than I would have been about a quarter ago.
Right, far more hopeful than Maithili would have been a quarter ago, and that's quite saying something. But Jaggi, coming to you, the high frequency indicators, the micros for that matter, do you believe those are looking better and it's only time they catch up and add up to the big macro?
See, I think we can certainly say that the worst is over, that the economy has bottomed out and it should see a growth cycle, and the third quarter numbers show that. But I think when we look at what's happening in this quarter, you have seen banks suddenly clogging up because of scams and frauds and other things. And the finance ministry is asking banks to do an audit of all 50 crore plus loans, and there are other measures coming in to check that frauds in future don't result in people fleeing. So this is going to have a certain amount of depressive effect on credit growth, and there could be a clogging up of credit in the coming months, and this can be bad news. And if you see the GST numbers in January have been flat compared to December. We thought January should see a much stronger revival, but we haven't seen that. And in February, if again things start slowing down, we can only hope. February is only 28 days in any case, and then you have March coming up. So if we are expecting the growth to start flattening out because of a credit crunch which is coming up on because banks are getting overly cautious. I think this quarter is the one which we'll need to watch very, very carefully, and all the high frequency numbers have to be supportive in terms of positive signs in every single month between January and March. Then only we can say that we have fully left all the bad news behind. Let's not forget that some of the bad loan crisis will start coming now. I mean, we've just seen one telecom company go bust and go to the NCLT with probably banks will have to take a haircut of about 10,000 or 12,000 crore. And then you have the PNB haircut coming up, and you are going to see the markets crash up to in a long term. So we are seeing a lot of negative signs in this particular quarter, and so the jury is still out on how the year is going to close, though I still think it will be above, it will probably be around 6.5 to 6.6%, but we need to wait and watch before we are clearly saying that we are up and away.
Wait and watch before you say you're up and away. Cautiously optimistic, that's Jaggi. But Dr. Pranab Sen, let's talk about let's look at it in a more granular manner. And you touched upon agriculture growth, and the reason why sort of Maithili pointed to the fact that it's potentially good news is because we've reported a growth of 4.1% despite a high base from the same quarter the previous year. Are you surprised at the sharp pickup, or do you believe that because we haven't seen strong growth nominally, you'd be a little more cautious with the performance of the agriculture sector?
No, the 4.1 is really not unexpected. If you really think about it, we had 2 bad years where the growth in agriculture for over those 2 years was 0. Now you've had, after that 2 years where collectively the growth has come in at about 11%. So if you look at 4 years together, it's about averaging about 3%, which is roughly what agriculture should be doing. So all that has happened is we have gone back to where we were 5 years ago. So nothing really extraordinary happening there. But as I said, my worry on agriculture is that when we have a reasonable growth on a strong growth of the previous year, prices collapsed. And the net result, of course, is farmers' income got affected. And what, to my mind, is the most telling part of the data that got put out today is private final consumption, which is a very strong indicator of what households are doing, grew at only 5.5%. Now, typically in India, the difference between the growth in private final consumption expenditure and GDP growth is rarely sort of more than about 0.2, 0.3 percentage points. This is a large gap, which means that essentially household incomes are either not growing as strongly as they should, or households are actually holding back on their consumption. Neither of them are good news.
Maithili, I want to take that point in a more granular sort of a way. 4.1% agriculture growth is obviously forestry included as well, and I want to ask you, 4.1%, is it a reflection of the non-crop agriculture, A, and B, at 4.1% agricultural growth, are we to say that the rural stress is perhaps on the mend? Are we to say that consumption is going to finally pick up in that sector of the economy?
Well, yes, certainly I would be more hopeful of that, particularly because if you look at the CSO's data, they revised all the data for the previous year quarters upwards and for the previous years also. So, the comparable number for the previous quarter of the previous year is about 7.5%. So, despite that 7.5% growth in agriculture in the quarter of the previous fiscal, we are showing 4.1% growth, which is very, very heartening. And this would in fact suggest, because particularly since Kharif output has not been too good, it would suggest that in the agricultural sector, dependence on crops is coming down, and non-crop output and non-crop income as from dairying, horticulture, floriculture, or non-crop output income, that is increasing. To that extent, it means agriculture is becoming more resilient and the monsoons are not as critical as before. In a country like India, where monsoons have always been very critical because we have not been able to extend the irrigation coverage, this would suggest a certain amount of insulation of the farm income to natural factors. Though of course, as Pranab says, the distressing fact is that whenever crop output is good, the incomes do not rise commensurately because prices fall. And there hopefully the government's change in the MSP policy, though that could have inflationary impact, is going to be of some help to the farmers. So overall, I would say the performance in agriculture is good news, and provided this continues and the monsoons hold out in this particular calendar year also, I think the government would have reason to celebrate, because farm distress is what's going to impact election outcomes most of all. So to that extent, it certainly is very welcome news.
Okay, you're saying this is welcome news. Let's shift focus and talk about the corporate sector. Manufacturing has grown sharply at over 8%, Ms. Kamineni. Are you seeing early signs of revival in the private investment cycle? Anything that tells you that we are likely to see revival of the private investment cycle over the next 3 to 6 months? Ms. Kamineni?
I do think that, like we said, and I continue to maintain, that next year will be, next year you will see significant investments, and especially, the NPA resolution, that you will have steel capacities that are continuing to grow. Cement, for instance, was 11% growth, which is not there, which we haven't had for a long time. The coal privatization, all these are clear indicators that that as the core economy picks up, we are going to see investments in capacities in many sectors, especially the high performing ones of auto, transportation. All these will start moving up, and I really want to see more construction. So these projects, the big rail projects will get awarded. We will see some movement in defense. So net, I think that people are going to start, you're going to see new projects that are broken ground, and actually which will need to come on stream quickly next year.
Jaggi, I want to specifically talk to you about private investment, and given the fact that manufacturing is at 8.1%, listed companies have reported better earnings. The question really is private investment really picking up? Statistically, yes, GFCF at constant prices has gone up by 12% versus 6.9%. In the third quarter, it is at 12% mark. How soon do we see the impact on the ground? Because private sector investment picking up will mean more job creation, more economic activity. Yes, cement output did go up, but is it corroborating and showing results on the ground? So my question really is private sector investment, and is GFCF at 12% really telling us the picture on the ground?
See, I think private sector investment will be patchy, and it will probably be going a little more towards the finance sector and some other infrastructure sectors which are directly receiving government payments and other things. So as far as this thing, but I think in the next 3 months you should see a sharper pickup, because as the NCLT process gathers steam, you have already seen the first of the steel companies being resolved in terms of bankruptcy. You saw Monet Ispat. Now if you see SR Steel, if you see Dalmia, Binani Cement and two other big steel companies going to be sold, we are talking about the return of nearly 80 to 100,000 crores coming back to banks, and some of them with practically no haircut or very low haircuts. Some have very high haircuts also, but those are the smaller companies. So we are talking about, and the new owners will obviously start investing in these companies, and you're going to see that kind of investment shaping the investment cycle in the next 2-3 quarters. And I think some of things will start coming in the first quarter of next year, if not in the current quarter, that is by March end. Some of the money should start coming in, but banks also have to provide for other bad loans. But I think overall you will see that the new, as the NCLT process gathers steam in 2018, you will see a sharper pickup in investment from the new owners. That's what I expect will happen and will drive something more than just the anecdotal growth we have seen in some sectors like real estate, construction and finance.
Okay. Another point that I want to touch upon, and I'm coming to you, Dr. Sen, but I want a quick word from Shobhana Kamanini, because Jaggi referred to it in his, in his earlier remarks, which is on credit flow. The new norms for forensic audit of NPAs in excess of 50 crores. In a sense, are you concerned with PSU banks turning even more cautious when it comes to lending to corporates? Could that choke the flow of credit to the SME sector and even to large corporates, Ms. Kamanini?
I can't deny that fact that it is a worry. And but I would put a rider on that worry, saying that what you saw is actually a work in progress. They've been provisioning for the last 3 years, and I think that the real worst is behind them. Now it's a question of using what they have and rejigging. Where CI has strongly recommended that they put more technology in place. The more forward-looking PSU banks do have it. So I hope that they will not choke, and we do need to keep credit coming, because it's for these MSMEs that they will drive. There's 60 million enterprises in India that will continue to require credit, and they'll go to the PSU banks. We cannot deny this, and it is fundamental for our economy.
Yeah, I know it's fundamental for the economy, and I think a lot of people are, though, a little worried about what will this do to credit flow, and who better than Dr. Pranab Sen to ask this. And sir, are you somebody who's apprehensive? I mean, just when we are seeing gross fixed capital formation go up, just when the RBI in its last credit policy said we are seeing early shoots of recovery in credit growth, and now, there comes this scam, and obviously the collateral damage on account of that. There will be greater compliances, rules will be tightened, loans perhaps will be reviewed far more, and even smaller loans to the tune of 50 crore rupees. What does this all do to credit offtake? What does this do to lending by banks? I mean, it is obviously a disincentive in terms of risk taking, both by the borrower and the lender.
Well, frankly, my view on this matter is that we went through a period where the banks focused, I think, excessively on large borrowers, large equals safe kind of a syndrome. That particular bubble, I think, has been pricked. The question is, are the banks willing to turn their heads back to where they were 10 years ago and start looking at the SMEs with a much more favorable eye? Because the SMEs have been hurting, and Ms. Kamanini just said that. And frankly, I completely agree with her that if you really want to see rapid growth happening, it will have to come from the SME sector. And so it requires like a mindset change in the banking system, get away from the biggest beautiful syndrome.
Right. Maithili, comment on that. Do you agree there with both Ms. Kamanini and Dr. Pranab Sen on the impact that this is likely to have on credit offtake in this sector?
Well, I'm afraid I think we are kind of barking up the wrong tree with the government and the RBI tightening the screws, as it were, on public sector banks, because the RBI's latest circular on NPA provisioning is almost textbookish and very impractical. If you were to insist upon that, then the banks would become so wary of doing any kind of lending, and SME lending perhaps is even more problematic than lending to large corporates, because many of the SMEs do not have proper even books of accounts, even the medium scale, and as we know, auditors have not been the most ethical in drawing up balance sheets. So the risk perhaps in lending to SMEs is much greater than in the case of large corporates, where there is a certain formalization, where there are certain set procedures. Of course, in the case of the infrastructure sector, is a different kettle of fish altogether. And so given the RBI's strictures, given the latest press release or the statement from the government saying every account of over 15 crore has to be scrutinized, every NPA of over 50 crores has to be scrutinized to see if there is an element of fraud, all these are going to keep bankers so busy, and they are going to be so worried about in case they make a mistake and in case their intentions are questioned, regardless of whether it's bona fide or malified. I think we are not going to see a credit pickup. So I think it's very important, and remember all these large undertakings, Jaggi was talking very hopefully about the NCLT process. Yes, you need to have new buyers, but they will only bring in the equity. You still have to go to the banks for debt, and unless that debt is forthcoming by way of credit outflow, you are not going to see an improvement in the situation. So I'm afraid the government and the RBI will have to tread much more cautiously and be much more pragmatic if they do not want to see credit dry up altogether.
All right, I also think that's a comprehensive debate as far as credit offtake is concerned, but I think we've got to put the spotlight also on exports. Hasn't done too well in Q3, but the government is obviously betting on 15% growth in exports for next financial year. Ms. Kamleni, are there enough enablers for that to happen, because export is such a huge pie of the whole growth story?
I think the growth will continue in certain sectors. I like the fact that apparel and textiles have picked up smartly. There's been a lot of impetus for leather. These are things, as the global growth happens, these are easy sectors that will happen. Auto has entrenched itself in the global supply chains. So some of these definitely we're going to see growth in, and I hope that as the markets rise, all boats also, and India is poised for that growth, because I think we have scale, we have technology, and the services sector will come back strongly. It will be more digital, probably, that they'll be working on AI and digital and analytics for the rest of the world. So I do think that on all counts, export should pick up, and they will be part of next year's growth story.
All right, Jaggi, quick last word from you then. And I know this headline will probably be India is back again as the fastest growing economy, and there will be a fair amount of chest thumping here in New Delhi. But since you struck a cautiously optimistic note, trying to understand what really are the levers from here on for us to accelerate our growth.
One first lever obviously has to be exports, because that engine has not been firing for quite some time. It's just started coming into action, and if the rupee depreciates, say something like anything from 4 to 6% this year, by the end of the year you will see another accelerator. But the worrying point on the same front is, if the credit growth is going to get crunchy for say sectors like gems and jewellery, you will see both a decline in imports and in exports. So that's a depressive effect. But I think overall exports will provide that little extra fillip this year, which we did not see in earlier years, and I think next year should be even better on this front, once the rupee also adjusts and the real effective exchange rate is not sort of penalizing exporters. I think IT should also come back in a big way next year, due to these factors.
All right, on that note, completely out of time here, but thank you very much for your views, perspective and analysis of Q3 GDP numbers. India, yes, will be one of the fastest growing economies in the world in the third quarter, but for the momentum to sustain, Q4 has to do well. The enablers and the challenges will have to be tackled over. Thanks very, very much for being with us, our special panel. We'll take a quick breather and be back with plenty more. Sandeep?
That's right. Up next on the India Development Debate, we put the spotlight on the big political story of the day, the arrest of Karti Chidambaram and the political fallout of that. We'll also debate the substantive charges that have been made by the CBI. Back in a moment with the big political debate on ET Now.